Good morning, traders. It is Tuesday, the 16th of September, 2014. It's 8:02 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. As always, a quick rundown of the overnight news. Overnight, German September ZOO expectations had a small beat, 6.9 versus 5.0 consensus. Current situation misses, comes in at 25.4 versus 40.0 consensus. Also, UK August CPI core is higher year on year, 1.9 versus 1.8 consensus. This further supports that the Bank of England is likely to be the first to increase rates. The ceasefire appears to be failing in Ukraine. Ukraine was cited as shelling rebel positions in Donetsk yesterday. OPEC Secretary General Badri says that oil prices are set for recovery by the end of the year for those of you who are trading crude oil. And in U.S. PPI, final demand came in at 0% in line just about a half hour ago. Looking ahead, a very light day on the calendar. At 10:30, we have a 4-week 30 billion auction, 52-week 25 billion auction, and then at 3 o'clock Central, right at the cash close on Wall Street, we have net long-term tick flows, negative 18.7 billion, and then total net tick flows at negative 153.5 billion. Let's take a quick look at yesterday and what has happened. So mostly yesterday, what was expected is for the market to drop down to about 74, since it was opening right against the point of control from Friday here at 77.25. The opening print was 77.5. Turn down my news feed here. 77.5, and it immediately dropped from there. The expectation was it would test 74.50, the overnight LVN, and the small pullback area from the prior day here, and it basically pushed right through and got below value. It pushed down to 73.75 before it had a 1.5 rotation up. And then it continued to push lower. It took a while for the opening swing low to be found at 72.75. Once it got to 72.75, that's our biggest rotation for the morning. So that's what we see as responsive buying back up. So that's the first point at which we see buyers step in, and then immediately gave that up. It pulled back to the mid, and it gave that up down to 70.50. Pulled back to 72.75 to confirm the opening swing. You can see the confirmation here. And then it just chopped around to continue lower to 69.50, and then it found and then it got low enough to find real buyers at this level. So 69.50 is something you want to keep an eye on for today's session. Because that's the first place we found buyers yesterday. The push up brought us back to the close of Friday, and then it was pretty much a murky session all along. Contrast that with the NQ, which had a clean open drive down. You can see all the power on the delta, and in the price action was straight down out of the prior day's value. It really had a minimal test up before it fell, and then once it fell, it just could not recover. So what you have is a trending profile, and then the market found balance down in the 40.23 area. So the NQ was a little bit cleaner in terms of what it wanted to do. It ended up bringing the point of control back down to the one that we had at 40.20.25. which goes way back to the 19th of August. The 19th of August was our gap day in the ES and the start of this entire MC. So I've got the MC in the NQ starting here on the 18th, and it's basically come all the way down to the lower extreme of the microcomposite. So overall, this product remains in balance, but there's very little beneath it. See this from 403, from 4,003 down to 3,980. There's very little in terms of volume. That's the Nasdaq. Let's get back to the ES. Later in the session, the ES was able to recover and actually break the IB high. This took care of, in one sweep, it took care of our overnight stat, our IB stat. I expected a pullback to 75.50 and further continuation with a potential of a push back up to 82.75, but it had no steam in it whatsoever. There was just no interest in anything further once this rotation was done. This was the biggest rotation of the day, and it happened to be a buy rotation. Okay, so that's what it accomplished yesterday. It basically tested further down into the composite. I guess our image to show you the composite on is right here. So all we did is we moved away from the point of control on Friday, and then yesterday we opened, tested down further into the composite, and then came all the way back to close near the open. So that's what we've done. The market's behaving just like it normally would if it were in balance, because it is in balance right now. We continue to find buyers on the close, as I had mentioned yesterday. So we continue to have these buyers show up on the close right here, 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 here. We're seeing aggressive buying on the offer versus the bid, selling on the bid on the close. Not sure what that means yet, but generally, if we have a weak high like we did here, if we have a weak high plus strong delta into the close, that generally carries over overnight, and it holds firm. And that's why for Friday, the expectation was we would breach 92.25 and start moving up higher on the composite. It didn't do that. It ended up selling off. So some odd behavior here. Not an easy trip, but still manageable if you just wait it out, wait the open out, and discover who is in control at the open. It's fairly easy to see when it goes into sideways chop or local to local, or day time frame traders are in control, and then you just have to switch to a kind of a mean reverting scalping kind of setup, and that's what we have. The market overall is pretty quiet. Today, the FOMC meeting, I believe it started at 7:30, and the announcement's tomorrow, and it's going to be a key announcement at 1 o'clock on Wednesday, 1 o'clock Central on Wednesday. So we'll see what they come up with. I think the market's anticipating some sort of policy change, and so it's just sitting sideways. The selling is mostly a departure from risk to safer assets in anticipation of that move. And then again, on Thursday, we have the Scottish vote. It's looking like the no's are just tipping ahead a little bit. I believe the Prime Minister Cameron was in Aberdeen yesterday or somewhere in Scotland, and was pleading with the citizens in Scotland to not vote yes on the independence vote. So we'll see how that plays out. That's going to be key on Thursday and through Friday. I think the voting does not end until Friday morning, so keep an eye on that, especially the any British pound, any cable currency pair. Overnight, basically not much happened in Asian session and the European session sold off a little bit. The market has pushed down into yesterday's value, which is a valid value area, and it's holding near the lows. It just made new lows at 71.25 here, and it's holding new lows. It hasn't really done anything or gone anywhere. I don't see anything specific about the overnight that tells me that that I need to pay attention to any particular structure. 75.50 again. You recall I mentioned it as the pullback area, the expected pullback area after we put in the high of 79. 75.50 put in an LVN, so I'm going to keep an eye on that in the open and see if there's any reaction there. But right now we're trading 71.75. And we still have about 16 minutes to the open. Overall, the expectation for today, between now and the open, I expect the overnight low to be pushed a little bit further, but the expectation for today is for a continuation of the trend that's been going here with lower and lower and lower points of control. The market's just pulling back. It continues to seek buyers. It did a good job of finding them yesterday, but we keep pulling back, and I'm very interested in what happens in the 69.50 area where buyers stepped in strong yesterday. We'll see if we find anything, but below here we start to climb into this high volume node, and then we have a gap between 62.75 and 61 below. So what we've done is we've taken back pretty much everything that we've gained since the 19th. We put in a high and we're pulling back, and this is just a very, very normal pullback. The 38% fib is at 59.50 or so. 50% is at 47, which happens to coincide with a CLVN area. So that's as far as it's likely to push. When you put a profile on these trend days here, you find that it's very very thin all the way down into this 40, 37, 40 area. There's not much here to hold the market from dropping down into that 47 area. So that's what we're looking at for today. CHOP on the open, I expect it to try to find responsive buyers, but I expect that it'll continue to push the low down into 69.50, possibly break by a tick or two or a few ticks, and then find the buyers to come back. The market's been making new lows by pushing the low and then bouncing up, pushing the low, bouncing up, pushing the low, bouncing up. So buyers are still there, but I think the intermediate term players, the higher time frame players, are becoming more conservative with their risk and are taking the opportunity to unwind some positions. But buyers are still interested. But on the open, I expect that it would try to push up and then be met with sellers, and then I expect the low to be taken out and for us to push towards 69.50 for a break. I don't expect it to break very much. I don't see any point to the market pushing in any particular direction today. Remember, the FOMC is tomorrow. But I expect it to break by a little bit and then turn around and then get back into the prior day's range and chop just like we did yesterday. So yesterday, 71.25, and we pushed to 69.5, and then as soon as we were done with breaking the low here, we found the buyers back up, and then it tried again to get below the low of Friday, and it found buyers, and every time it did that, it would find buyers. So I expect more of the same today. That's my primary hypothesis. These days, generally what I do, and if you're not consistent with your trading, I strongly recommend you stick with one product and become very, very good at that trading that product and reading its nature to build intuitive habits into trading it. I do not suggest switching to gold or crude oil or whatever, but the action is elsewhere right now. There are other products that are moving a little bit better. I prefer the NASDAQ over the ES currently, and I'm pushing anybody that is at stage 5 who's having a hard time with the ES to look at the NASDAQ for now. until it loosens up. But overall, my strategy is just to keep my hands just off the mouse until I see something that does give me a clear advantage, like when the market breaks and shows me that there's a higher time frame in control. I'm looking for the pullback to trade in that direction for a couple points or whatever. Otherwise, I look at other products. But I do not recommend you look at other products when you're trading until you're fairly consistent. Anyway, I'll leave you with that thought. Again, patience is key here. It's still basically summer trading. The action, the volatility will come in tomorrow at 1 o'clock. So let's sit on our hands and be picky until that's done. Okay. Have a nice day.